Hello and welcome to another financial analysis video. Today I'm looking at U.S. Bancorp, which is trading near its 52-week low and just reported earnings of 81 cents per share, which met expectations. U.S. Bancorp is an interesting bank. It's considered, it's part of the S&P 500, so I kind of call those banks big banks. They're not as huge as some of the really big ones that we're aware of, but U.S. Bank has taken steps to cut its leverage over the past few years, and recently it started to creep up a little bit, but it's about 8-to-1 leverage, which is pretty close to normal for banks this size, and really from a historical standpoint is actually pretty good. On the operating end, they've done really well in terms of bringing back trailing 12-month revenue. It dipped for several quarters and has now returned to its 2012 levels. So on the revenue side, they're doing good. Ignore cash flow. I did not. The press release did not have the third quarter cash flow information. Now, here's something that's interesting because it's got a declining return on equity. And you look at that and you say 12% return on equity. That's actually pretty good for a bank. So it's declining, but still, U.S. Bank has a high return on equity. So high that I will show you the peer group, which I showed this as well, I believe, with Wells Fargo and Bank of America. I turn to this. This is all the banks in the S&P 500. And in fact, I was talking about that 8-to-1 leverage earlier. Take a look. There it is. It is actually slightly higher than the rest of the pack, but still not that bad. But on the return on equity side, U.S. Bank has the highest return on equity. And, I'll tell you, that to me is really impressive, even though it is still declining. But as I keep looking, I see, okay, revenue growth coming back. Earnings, trailing 12-month earnings quarter to quarter, I know I got to fix that, is improving. So, what I got to look at this and say, what do I do as an investor? How do I want to look at this? I see 13 times trailing earnings, 12 times forward earnings, good earnings credibility. So let's look at the peer group. This is where I take a look at trailing earnings, and I see where U.S. Bank is. Boy, it's right in the middle of the pack. And, you see this stuff, and I like to look at this as a value investor, and I come back here to J.P. Morgan. That's where my eye goes. Forward earnings, 12 times. Again, middle of the pack. So, interestingly enough, and we talked a little earlier about the high dividend yield of People's Bank, U.S. Bank's right in the middle. So, my takeaway from this is that U.S. Bank is essentially a middle-of-the-pack bank in the S&P 500 from a performance standpoint, from everything I'm seeing in all the ratios. I want to jump over quickly to earnings yield. That's approaching 8%. That's something that, investors may want to look at. Now, the price to book is at a premium to its peers. I believe, in my opinion, because Wells Fargo is in the same boat, that it is because of that higher return on equity. So there's quality there in the earnings, but when you look at all the metrics together and you compare them with their peers, you really see that U.S. Bank's the middle of the road. I'm going to keep this on a hold, but I'm going to watch the dividend and the price over time to see what happens. They've really not recovered from the big correction back in August. And so, I'm just going to keep my eye on it and see what happens. But for the time being, I'm not recommending anybody really jump into it. It's not that attractive of a stock outside of the return on equity. So it just merits further research and further watching. Hope you enjoyed this video. Happy investing.